Hey everybody, welcome to Mortgage Today for Wednesday, October 9th, 2024. And oh, what a day it was. UMBS were on the wrong side of up this morning, down 6 basis points. Stock futures were down 3 points. Stocks were lower as the federal government considered antitrust suit against Google, which is dragging down sentiment across the big tech. Bonds and MBS were pretty much flat, like I said, down 6 basis points. This week's economic calendar is chock full with Fed speeches, and most of them were happening today. Collectively, those will be more relevant than the release of the minutes from the most recent Fed meeting because that was 3 weeks ago, and anything before the jobs report is basically an eternity ago. U.S. equity futures wavered as Treasury yields held above 4%, and concerns over potential antitrust crackdown on Alphabet weighed on the markets. Alphabet shares fell after the U.S. Justice Department suggested Google may need to sell parts of its search business. Investors are also focused on the Fed minutes, upcoming U.S. inflation data with rising Treasury yields dampening rate cut expectations. Despite global economic uncertainty, some investors remained optimistic about a soft landing on the U.S. economy. In the macro, through the first 11 months of fiscal year 24, federal spending rose $392 billion or 7%, while revenues increased by a healthy but smaller 5.5%. Debt service rose by $227 billion, and Social Security Medicare increased by $174 billion. Other categories that bumped up were defense, which increased by $52 billion, and veterans benefits by $40 billion. Outlays on all remaining programs fell $100 billion. So all of that is why reducing spending is so tough. Bonds lost ground on Wednesday, all in all at the end of the day, with treasuries having a far rougher go than the MBS, but not by much. Ultimately, if one had to guess at reasons for the MBS outperformance on a Treasury auction week, blaming the Treasury auction week is the easiest solution. In so doing, we're also planning on the next rally being better for treasuries than it would be for MBS. The present weakness doesn't have any good immediate justifications. This is how choppy sideways drift is playing out after the initial rate spike that followed the Friday jobs report. The worst may be over, but that doesn't mean bond weakness is over. As for salvation, don't expect miracles from Thursday's CPI. Likely has the potential to calm some nerves if it comes in much lower than expected, but even more potential to reinvigorate the sell-off if it comes in much higher. UMBS closed the day down 19 basis points at 100.29. So at 100.29, that is putting us in this very wide range. We're right in the middle of that. We have a ceiling up at 101.93, which is the 50-day moving average. We have a Fibonacci line not that far below us at 100.18 that hasn't really been tested. It blew through that way back in late July and hasn't come close to it yet. So we don't know how hard that will hold things up.